And we're back with you to take a look at your ag commodity trade here on a Monday. I'm Marlin Bohling. I am joined right now by Mr. Chris Swift of Swift Trading Incorporated in Nashville.
Good morning.
Happy Monday.
Thanks, sir. Same to you.
You survived the weekend.
I did indeed.
So thanks for coming in.
Yes, sir.
Okay, we went home on Friday. Everybody was all full of optimism in the grain markets. Then they come in on Monday morning and everybody's full of negativism in the markets on the grain
it
side.
Sure
here.
seems that
What
way.
happened over the weekend here?
You know, I don't think anything. Really good weather, great pollination weather. As best I understand, this week and next week will be the two big weeks for pollination and corn. And right now it looks like everything seems to be really good within the belt. Outside of the belt, like Tim said, we got some really hot temperatures that we're going to have to deal with. I don't think any of them are straining just yet, but they are clearly going to be some hot temperatures outside of the corn belt.
So is this a case of where the market had been full of anxiety, I guess, ahead of the actual imposition of the tariffs on Friday? Mm-hmm. Then it came out and it was one of those sell the rumor, buy the fact type things I heard, and then they had to turn to weather, and now I guess there wasn't anything to get too excited about.
No, there really wasn't, and there was a lot of selling pressure that had taken place to push the grains down to where they are right now, and so some kind of relief was needed, and they got a little blow off on Friday, and now I think it's back down just to business, and unfortunately through the summer, I think that's what a lot of it will be, is just the grind of business back and forth with not a whole lot really going to happen.
Well, what do you say we take a look here at what's going on the trading floor in Chicago, and let's take a look at that corn market right now. Currently, we are still under quite a bit of pressure. We opened up about 7.5 lower. We're now 8 lower at 3.52 per bushel. In December, down 7 3/4 at 3.65 per bushel. Meanwhile, on the soybean trade, now here we had double-digit losses early on, and we still do. They've expanded a little bit on that. We have August soybeans down 18.5 now at 8.59. It's only one tick from, now 2 ticks from our low of the day here, Chris. We have November down 19.25 at 8.75 per bushel. That's only one tick from its low of the day. So we had some big gains on Friday. We're giving back, what is that, about 2/3 of what we had on Friday. Let's look at the wheat trade. On the Chicago wheat, we have the September contract dropping 8 3/4 cents at 5.06.5. In Kansas City wheat, you have your September contract down 8 at 5.05. And on Minneapolis wheat today on the spring wheat market, we have September down 7 at 5.51 1/4. Cotton market, let's take a look at that, see what it's doing today. We have the December contract now 70 points higher at 85.15 cents per pound, so back up above 85 cents. Your thought on this wheat market here, Chris? Weak again today. Mm-hmm. We had heard that the harvest pressure was on the downhill side. Now, what's pressuring wheat?
Well, and I really don't know. I don't know what has pressured it all the way back down to, in some cases, new lows for the Minneapolis wheat, and of course, both Kansas and Chicago back at least a good 50% of what they had gained earlier this year. So I really don't know. Abundance of wheat, world supply continues to weigh heavily on the market. But other than that, I think we might actually start to see us crawl out of this.
You do? Okay. Yeah. And we're just starting to get some pre-report estimates trickling in about the report coming up on Thursday this week. Right. So that could be a market factor too. So we'll be sharing those as we get through the morning here. We'll come back in just a moment and we'll talk more about our livestock trade when we come back after this. And we're back talking with Chris Swift of Swift Trading Incorporated in Nashville. We're going to talk about our livestock trade. And let's go ahead and open up our livestock quotes here. Take a look at our live cattle board in Chicago. And I'll get Chris's thoughts on what we're seeing here. The live cattle board still mixed. We have August up about 15 cents at 106.52 per hundredweight right now. That's off of its earlier high by about 80 cents this morning. We have the October contract, though, turning lower by 24 cents at 109.40, and December down 25 at 113.45 per hundredweight. So we've been on both sides of unchanged today, not venturing very far from that level here. Looking at the feeder cattle trade in the early going today, we have the August down 22 now at 151.98. Keep in mind that we had a high about a $0.50 higher than that. We have September down 25 at 152.03 per hundredweight, so not very large moves to the downside at all. Meanwhile, on the lean hog trade, a little different story there this morning. We have the August lean hogs now down $1.74 at 73.68. That's only one tick from its low of the day right now. and it's actually over $2. It's $2 and a dime now off of its earlier high this morning. We have October down 183 at 56.72. So, Chris, my question to you is, obviously, we've been on both sides of unchanged in the lean hog trade, but they're really putting the pedal to the metal to the downside right now. What happened to the hogs?
Well, I don't think anything different than what we saw last Hogs and Pigs report. We're going to see more pork production coming into the third and fourth quarter of this year. More likely than not, starting in 2019, we'll continue with that kind of ramp up of pork production. So, and it's beginning to impact the beef a little bit at the grocery store. I noticed some significant discrepancies between beef and pork prices at the grocery store this weekend.
So what about all that talk that we had originally? The talk about Chinese tariffs was centered on pork.
That's correct.
That was a big concern back then.
And with Mexico.
And now it seems like it's maybe more soybeans, but is it becoming more of a factor again on the lean hog side?
I think they are that issue is always looming, and at any given time that is consistent pressure on the market. So when things come about that relieve some of that pressure, we get a little bit of a rally, like what we saw, some congestion the last couple of weeks. And now it's starting to go back in, and there's nothing really supportive that I can see for the hog market or beef market right now that would say we're going into a bull market. But the likelihood of beef going into a bear market is not very good either. Pork, though, already discounted, it may go down a little bit more, but those discounts being $20 and $21 into the fourth quarter have already taken up a lot of the slack.
We had a big run up in the cash cattle market last week. On Friday afternoon, the word came out $4 to $6 higher, I believe, than the week before. How tied to the corn market is this cattle and hog trade right now in whatever corn does, up or down?
I don't think really tight right now. I think that the production is so big in both that the amount of feed need is huge, and that's not going to slow down any at all. So I don't think that unless we were to get a 40-50 cent move in corn to the upside, that it would impact things too much. And we're already kind of seeing intrinsic values for corn right now. I think it'll be a little bit more difficult to get much cheaper than what we are.
Okay, well, thanks for coming in.
Absolutely,
Always
Martin.
a treat to visit with you on a Monday. And,
yes, sir.
Appreciate that. Look forward
yes,
to next
sir. Look
week
forward
again.
to it.